let's get into it, baby. If you guys are looking for a nice trading method that can make you some money, but it'll take some time and effort, a lot of time and effort, look no further. We're using pure price action. The only indicator we got on the chart is the 21-day EMA. It's a 2000 tick chart of ES futures, and we are going for 1 point scalps. What does that mean? Let's take a look at this trade right here. So in the overnight session, we had a nice consistent downtrend. We bounced off the highs of the trend several times. We bounced off the bottom side of the trend as well. And another thing that we noted, the midline is bouncing several times once again. So it just gives us more credence to the fact that this downtrend is valid. And what do we look for in a downtrend? We look for a pullback to the EMA, preferably with 2 legs. So if we're counting from this leg right here, we have 1 leg down. That's a first attempt to go lower. Second attempt to go lower. Come back, tested the EMA. It's really a form of a trap trade because if you're counting from this high, it's also 1 attempt to go higher, a second attempt to go higher. But we're in a downtrend. We don't want to be going higher. We want to be trapping those who are trying to buy. Here, when you get this bearish looking signal bar at the EMA, that's the trap trade. It's a failure of a second entry long. This is the second entry long right here. We failed, and that's why we kept working lower. That was the first trade I saw for the day. Then we kept going. Market opened right around here. So at this point, we got to reassess. I mean, we had this downtrend, but after a nice move down, after a news announcement, which happened right around here as well, prices started to go a bit sideways. So what do we look for in sideways action, or what we call a range? We look to sell high and we look to buy low, but also we look for those 2-legged pullbacks, those 2 legs to allow us an opportunity to go short or long. So if we look at this price action, we're going sideways. We have first confirmation of this resistance area here. We have a second confirmation. We have a third confirmation. This is really like a 4th confirmation at this area. If we're counting from this low, we have 1 leg up. We went down. We have a second leg up. Nice bearish looking signal bar at these highs. If you guys want to watch me trade live, I took this trade on the live stream, and what happened? We actually ended up getting stopped out. So I went short 1 tick below the signal bar. I put the stop loss 1 tick above the signal bar. We bounced off the EMA, and we ended up getting trapped. So this trade, it really, in my eyes, was a high probability trade. It followed all of my trading rules, except for the fact that we were trading directly into the EMA. So if you want to take a little bit riskier trade, sometimes you can break that rule, but this 21-day EMA is there for a reason. We use it to guide our trades, and usually 9 times out of 10, you want to take a short when prices close below the EMA, and you want to go long when prices are above the EMA. So eventually, prices did indeed do what we thought they would, but the real breakout, the real failed breakout that we should look for is this, because this is when we really took out these swing highs, came back, reversed, closed on the low, and then that's when prices started moving lower. So even in these ranges, we got to respect these short-term trends, and the rules of trend channels are that it's not over until we have a break and a new extreme. So let's zoom out a bit and explain that. So we have a wide downtrend here. We get our break, and we're still bearish until we test this new extreme, until we test that new low, because it's all tied to human psychology. The markets don't just go straight up or straight down. When you have a break of the structure, traders want to see a test at that new low to see if we're going to indeed go lower, or if we take out these lows and then start working higher, which is usually what happens. So let's take a look at this short-term uptrend. We had the short-term uptrend, we had a break, we had a new high, we had another leg to a new high, and then we started working lower again. So in this case, we had this leg down, we had a break, we had a new low. Eventually, we did take out the lows of the overnight session. So the overall downtrend, we had a new extreme. We're in a range. We're now at the lows of what looks like to be a potential range. We start getting some more congestion here. We bounce out and we end up working much, much higher. Now, you could argue for a possible higher low right here. So if we're looking at this downtrend, we had this leg down, we had the break, we had a couple legs to the new low, and we took out the low of the day. When you come back up, have a nice bullish bar, double bottom. It's a possible trade, but in my eyes in real time, it was tough to really decipher if we were going to go higher, but you might have seen this and you might have caught a great move. So now, when we see prices continue working up, continuing to make new highs, make new lows, that's when we start looking for a wider term trend, which we have drawn right here. We have a break of the structure. We don't have a test at a new high. We start working sideways, and the range rules apply once again. So we have a very concise range in this case. We break out the bottom. We have a nice bullish signal bar. Where is it? Boom, off the EMA. That's what we look for. We have room to the highs. So you can go long one tick above this signal bar, put your stop loss one tick below it. You could have caught a nice move there. So now, at this point, I didn't have this wide term trend drawn. All I had was this move up. We had a break, move to a new high, signaling, okay, the uptrend could be over. So same thinking as the higher low here, except this time, we started going lower. We pushed through the EMA on the downside, came back, formed a lower high. I went short here on the live stream again, barely got out for a 1 point scalp, and then prices actually continued working higher. So now is when I started thinking, okay, if this was the uptrend, which we had right here, we had the break, we had the new high, then it would be logical to think it would be over and we would start working lower again. But you always got to keep into account what's at play in the bigger picture. And what happened? We got a lot of room to the overnight highs as well. So in reality, we're really just in an overall range as well. So we came back to the midline of the day. Usually it's a point of hesitation. That's where we ended up having a little bit of hesitation. But an overall target that we kept discussing on the live stream was about the 4,400 area, which were the overnight highs. So let's plot this wider term uptrend, and it'll hopefully give us some good setups off of the trend channel. So let's talk about this trade right here. We've been discussing the two-legged pullback. This was a two-legged pullback that actually did not work out, simply because it was a doji looking bar, but also we bounced off the top side of the trend channel. So that usually means, what are we going to do after we bounce off the top side? We're going to start probably working our way to the bottom side. So what I thought during this trade, I actually went long here. I thought that it was going to be a nice one leg down, two legs down, second entry long, two-legged pullback, what we look for. But once again, it was a neutral looking bar. It was kind of hovering above the EMA. We usually want to see a test at the EMA or even a break below the EMA before going long, but it happens. No one is 100% in these markets, and we end up actually doing what we thought, because these price action rules are followed in the markets. That's why they are called rules. We come back to the bottom side of this channel. We don't get a great setup, and then we end up working higher. I actually took a counter trend trade here, got a little bit lucky to get out of it. But basically what my thinking was here with this lower high was that, once again, I probably didn't even have this wide term uptrend, but I was playing a range. We were at the top of the range, went lower, had a lower high, and we got bailed out with a 1 point scalp. Sometimes you don't have to predict the big moves if you're going for scalps. You just get in, get out 1 point, and we got bailed out there. But once again, we got to respect this uptrend. So here I took another lower high, got punished. It happens. that's why you you don't want to go counter trend, but let's talk about my thinking on this trade. So we basically touched at the overnight highs. So clear resistance area. To me, this looked like an exhaustion move up. Whenever you see a strong move in the, like, basically straight up, it means that it's a bit of an exhaustion move. It's not sustainable. So when we came back lower, made a lower high, we had room to the EMA. I thought we would get out for a 1 point scalp, but got trapped. It was a tough day today. I'm not gonna lie, but that's why we're live streaming. We're live streaming the whole journey, and we ended up eventually working higher again, touching the bottom side of the trend channel. So now you definitely only want to be looking for long setups at the EMA, which we get right here. So this is a textbook trade in my eyes. We have a new high. We're going down. We have a first break, first attempt to go higher. We're going down again. This is the second attempt to go higher. We're at the EMA. EMA is holding strong. Also, we have this short-term downtrend. We have a break of the downtrend. We have the new low. All signs are pointing up. That's a nice looking trade right there, and you could have caught a great move. So at this point, from the lows all the way to the highs, it's about 43.65 all the way up to 44.15. It's a 50-point move, which is nothing to sneeze at. So usually when we have such significant moves in either direction, at some point the momentum has to slow down, which we ended up having here. And honestly, for the rest of the trading day, I didn't see too many great setups. We ended up working down, giving away some of the movement that we made earlier in the day. But after about 11 a.m. Pacific, 2 p.m. Eastern, really nothing too great to trade in here. Very choppy. But for the fun of it, let's analyze what we had. So after this trade, we had a couple more legs up, and we ended up just working sideways a bit before we had a break of the structure. So now that we have such a significant move below the EMA, you want to look for a two-legged pullback in the short direction. And we get an opportunity right here. We have one leg up, two legs up, we're rejected. Nice bearish looking bar. You can go short, and then you caught that nice move there. Then we started a new sort of channel here. We had a little steep one, we had a break, we had a new low, and then once you see prices come back to the EMA, get rejected several times, that's when you can start plotting a wider term downtrend. And the trade I see that you could potentially take is right here. So we have test out this top side of the trend channel, and we're looking for those two legs once again. So we have one leg down here, we pushed up, we have another short leg down here, pushed up again. It's a second entry long, second opportunity to go long, but you don't want to be thinking long, you want to be thinking short. So this is a trap trade right here, nice bearish bar. You're going to trap all the traders who went long right here, and that's what led to this final move down. But after that, you could try to pick some trades out of this, but I really don't think it's worth it. I mean, we're just sideways, so there's a failed breakout right here. Two legs again, one leg up, two legs up. Nice double top. Not bad for a little scalp, but other than that, I'm not risking anything. Hope you guys enjoyed the video. We'll see y'all tomorrow morning. Live streaming every single day. Peace out, y'all.